Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. What I want to do in this video is run through our breakout signals and take it to the next level. Now I've done video 1 on this. If you go to my playlist, the link is below the video, you'll see the TWA breakout strategy. Okay, so this is video 2. Also, if you head over to our Discord, I've created this under tutorials breakout strategy. So this will be a series of tutorials. There's video 1 and this one will be video 2. I'll post that in here. So come back into here or go to my YouTube. You can follow these tutorials. If you haven't already, join Discord. It's free. And this is the free section here, Trader Zone. There's trade signals and all sorts of stuff going in here. And if you want to go to the next level, you can join VIP. The link is below. So let's go back to the video, and I'll show you how to trade this. What I want to do is explain the best scenario for a highest probability trade outcome. Now I've made some adjustments to the indicators, and I'll show you the settings in a little while. But here's the thing: when the breakout occurs on the 3-minute chart, it'll fire over here in the alerts log, and you'll be able to click it, come into the chart, and you'll see the signal. First thing to do is grab this vertical line tool. I've set it up in my favorites bar over here, vertical line, and you can set your favorites by starring them. Grab the vertical line and pull it through your signal. Make sure that you click this thing down here, bottom left, so that it transfers the drawings onto all charts. 3-minute chart above, 30-minute left bottom, and 4-hour bottom right. This is where the breakout occurred. Now, this has to tick a couple of check boxes. Signal here, what does it look like on the 4-hour? It must be that price is trading under this midline. That's it. A break under this midline. So anywhere in here, any of these pullbacks is an ideal entry. Clearly bearish on the 4-hour. We can see these lines heading south. Most important is that you want to see it trading under the midline on the 4-hour. So if that's ticked, we come over to the 30-minute. This line here is where the signal fired. We want to see the 30-minute bearish. We can see clearly the direction here of the trend. I mean, if the 4 hours trading under, this will most likely be trading in our favor. What this signal is giving us is, see how the pullback occurred here, and then the market starts to rotate and trade out. Well, it gives us an opportunity to catch this breakout. Then the next thing we need to see is our multi-time frame indicator down here, predominantly the same color as the trend on the 4-hour. So if it's bearish, we want to see this predominantly red. 3 out of 5 bars red. So we have a checkbox 1, 2, and 3. It's in a downtrend. We get a go ahead here to take this trade. Right, now if these aren't ticked, walk away from it. There's going to be so many opportunities, don't worry. But you want the best of the best. Rules of engagement. So what I've done here, I've switched on our trend bars bar color. We're going to use this, and you might want to enable the accumulation distribution level on the 4-hour and untick extend historical level. Take that out, and what that'll give you is support and resistance zones. Now see how this is marked up here, our signals here. See how this is marked up, this shaded zone here. If I color that, look what we've got. This is our distribution level right here. So on the lower time frame, now you can mark that up with a colored rectangle like I've done here. Important level. The other thing that this has got going for it is this. See this orange line? This is a key weekly level. So we've traded up into this 4-hour order block, now shaded orange. Okay, so there's so much information here to back up the argument to short this. I've traded into a weekly. There it is. a daily, a daily. That's the pullback, retesting, big resistance into this 4-hour order block. Signal, short it. Okay, rules of engagement. I'll just take that out. We don't need it. Where the breakout is, you can mark that up with a vertical line. Pick up the arrow tool. Where the breakout is, this is a break of structure. Look left, find the most recent low where the breakout occurred and mark it up. Okay, here's where it gets interesting. Look for the white candles, because wherever the breakout occurred, there's generally going to be a range of some sort. And you can see here we've got white candles indicating that the market was hesitating here. Consolidating, ranging. You'll see these white candles where the market's not trending, and it'll give you a range. See? So these ranges, we want to mark these up when we take the trade. So we mark up the breakout, and then we grab this rectangle shaded tool, we pull it through and up, and we set that up like so. We take this entire range, and what we do is we start to layer in. Like once this breakout occurs, we mark it all up, and then we've got this mapped out. We layer in sell orders, sell limit orders. We just layer them in through here. Now, whatever your lot size is, break it up. I prefer 3. You can go 5. You can layer in as many as you want. Work out your risk and work out your lot size. Break it up into smaller lots, and then the market's going to come back into this range, possibly. Sometimes it doesn't, and then you get a fill. Here we have now an opportunity with these limit orders filled, and we're in. Now, you want to make sure you set up your stop loss correctly. And I mean, it depends, what time frame do you want to trade this on? What time frame do you want to trade this on? So you can trade this on a 3-minute. In other words, it's going to be a tighter stop, and it might be a scalp or a day trade. The 3-minute is giving you the entry point. It's giving you the entry point. So if you wanted to trade this on the 4-hour, the 3-minute gets you in. Let's just mark up the entry here. All right, you can see that down here. There's your entry point right there. The 3-minute gets you in when the market pulls back and starts to rotate, so you can trade it on either of these time frames. 3-minute, scalping or a day trade. The 30-minute, more of a day trade. The 4-hour, day, intraday, possibly even a swing trade. So if you're wanting to trade this on a 3-minute chart, stop loss above the cloud. That's it. Entry here. There's your risk. You're trading it on a 3-minute. Set your profit target at 50% of the stop loss range, 50%. This is where you close 2/3, and then you'll leave 1/3 of your position in to run. That's how I trade it. So on the 3-minute, there's a lot of volatility, and you get taken out here. That's okay. Winning trade. Now, if you're wanting to trade this on the 30-minute, it's a deeper stop loss. So the entry is here. Stop loss above the cloud. So see the difference? This range here. It's way up there. A much deeper stop loss. Target 1 is 50% of your stop loss range. Take 2/3 off. Trail the rest. Look at these stop runs. Or if you want to go to the higher time frame, you want to trade this on the 4-hour. See, remember that the 3-minute is just your entry, but you can trade it on any time frame. This is the best entry on all the time frames. This 3-minute entry is it. So if you're trading it on the 4-hour, your entry was here, stop loss above the cloud. It's a much deeper. Target 1, 50% of the stop loss, whatever it is. And you trail. So see how the 4-hour keeps you in much longer. Much smaller position size. So you got to work out your position size. Don't go in too big. So work out what time frame you're trading it on and set your position size accordingly. I'll do another video on that. And this stop loss is well and truly above that. It's way up there. Well, look, here's the the weekly level here, look where it is. There it is there. So see the difference? Okay, your stop loss on the 30-minute is here. Stop loss on the 30-minute, I don't know, probably around here somewhere. But on the 4-hour, it's way up here. Okay, so you're giving yourself a lot more room. So you can trade it on any time frame. Hope that makes sense. Make sure you bookmark the video, and I'll be doing more of these. This is the Aussie CAD, and this is an ideal setup. So here's the thing, like when these signals fire, let's just run through and have a quick look at some of these. You know, do we get a go ahead or not? Let's have a look at the last signals. Take out any drawings. Okay, we've got bearish and a bullish. Mark them up, let's have a look. Okay, I've got a conflict. The 4-hour is trading under the cloud, and you can see that it's heading south. So we really only want to be looking for bearish signals. So we're going to ignore our green breakouts. We only want to go with the red breakouts, given that this is bearish. Are we trading under this line? No. It's a pretty deep pullback. The simple answer to this is let it go. See, we're seeing some pretty strong pullbacks breaking the midline here. Let it go. Move on to the next one. And I mean, sure, that would have been a nice outcome. There's more risk involved. You know, if you want to go for the best of the best, wait for the setup. See, that it's pretty messy. Let me just take this out for a second. The ideal situation is back up in here. And honestly, it's worth waiting for. What's this doing? CAD Swissy, here we go, look. It's pretty overextended as well. You want this to be retracing back into this midline. Yeah, it's trading under it, but it's overextended. It increases your risk, because if it's overextended, there's a good chance it's going to pull back into our midline here, the mean, right? So it's just increased risk. Take it if you like, but understand what you're trading. Let's go back and have a look at the signals, all right? What do we got? We got this breakout. You have to make a decision. It's definitely bearish, and it's traded under. This is a monthly level here. You're getting a bit of a pullback into retest under the monthly level. That could be a thing if you want to take it. It doesn't 100% tick my checkboxes. Let's say it's an 80%. Would have been a pretty nice outcome though. Look at it. So it's a matter of, you know, building your argument for the trade. How many checkboxes does it tick? See, here's the thing. There's a red breakout. Pull back into the mean. It's trading under, so that's okay. But it's heading up on the 30-minute. And we don't have the majority of these red. Let it go. You're just increasing your risk if you break the rules. And break the rules if you want to, but you know, we want an ideal setup. Right, this is interesting. Here's a bullish break. Let's mark that up. What have we got? There you go. There's your trade. All right. Where this breakout occurred, let me just mark that so we can see exactly where it is. In fact, we've broken above the midline here. We can see that that's trending up. These are sort of more or less sideways, but you know, we can definitely see that. The momentum is there on the 30-minute. There's your breakout. We've got 3 out of 5 on our higher time frame, you know, multi-time frame. So this does tick all the check boxes. So rules of engagement. There's the breakout. Look left. There's the previous high, broke here. Break bullish. Grab the rectangle. Have a look left, and we're looking for the white bars. Here they are. And we'll pull that through, and we'll mark up the entire range here. Bullish. So we're going to layer in our orders here. We might get a couple of orders filled through here. There's a trade. So far so good. Set up your stop loss according to the time frame you want to trade it on. Okay, so that's the setup. Euro CAD, what does that look like? Mark up the last signal. What do we got? Breakout. We're trading, well, the midline's back here. Okay, so well and truly above it. That could be a little bit overextended here. I do prefer it to pull back into here, and we take that. How far back this is pulling back also adds to your probability factor. But anyway, we've got trading above the midline here. Okay, we can see that this is trading up. We can see that this is trading up, bullish. Take it. Mark up. Previous break. Structure high here. Grab your rectangle. Pull it along your arrow. down through the range, look for the white bars. There they are. Mark up those. That's your range and your entry. Now you get a fill through here and here. TP1. See the pullback. So the 3 minutes a bit fast. You might want to trade this on. You can even go to a 5 minute if you want to set up your trade on the 5 or the 15 minute if you want to. What that'll do is it'll widen your stop loss and get you out of trouble. Have a look at it. Long position. Okay, we'll just average out our entry through here. Stop loss is going to be set under here. Target 1 is going to be 50%. Right, so in this case, target 1 is reached, but that's as far as you got with it. So let's just see what does it look like if you traded it on the 5 minute. So the 3 minute is for the signal. The 5 minute, you could be trading that instead. So let's just have a look. What does that look like? Under the cloud, well, there you go. See? That's different. So you just set your risk according to no more than 1% of your account. There you go. All right, so on the 5 minute, it gets you out of trouble. Wider stop. What does it look like on the 15? So you could be trading it on the 15 as well. Now the 15 minute, stop loss under the dots. Pretty similar to the 5 minute chart, but you're well and truly in this. Nice outcome. Well, you might be trading it on the 30 minute. See how it changes your stop loss? Always stop loss beyond the cloud, and you set your risk accordingly. So you might want to take that on a 30 minute. Target 1 is 50%. There's 50 there. 53, 49, there it is. Okay, target 1 reached here. It widens your target. It also gives you more room to breathe. So you can trade this on any time frame you want. Back down to our 3 minute, and then you can see the difference as far as your stop loss is concerned. Again, like the 3 minute is going to be more of a scalping day trade. We've got another one here. Okay, you're only interested in the bullish breaks, not the bearish breaks. That's a stop run. Clearly, stop run. Trades up, creates more liquidity under through the range. Another stop run, and then it's it's a lot of fun. Anyway, guys, I think I'll wrap up the video there. That's the strategy. I've gone into more detail around rules of engagement, but this is definitely an excellent strategy that could possibly make a big difference. Not financial advice, etc. You read the disclaimer. If you haven't already, join Discord. It's free. The link is below the video in the description. If you want to take this to the next level, gain access to the indicators, our VIP members only channel, invest $19.95 a month, and you have full access. Here's our Discord, and I'll be adding this video into down here our breakout strategy tutorial. This is video 2, and it'll go in here shortly. Free trade signals here, or join VIP, and you get a lot more trade signals, and we have advanced trading tutorials in here for our VIP members. Okay guys, with that, safe trading. I hope you have a great day. See you in the next video.